Political uncertainty throughout Europe and the deepening economic crisis has started to change our perception of gold as a safe haven. Over the last few days, it has been trading more like a risky asset. I am joined by Anne-Laure Tremblay, precious metal analyst at BNP Paribas London, to discuss the decline in gold. Thank you for joining me, Anne-Laure. Do you think gold is still perceived as a safe haven, and will demand for gold improve anytime soon?
It's true that when you look at the performance of gold over recent weeks, you would get the impression that gold has been behaving more as a risky asset rather than a safe haven. What we believe may be happening is that, while physical demand continues to be strong on the part of retail investors through bars and coins, for example, on the part of central banks and on the part of Asia, in particular China, the paper market, in other terms, investors who have exposure to gold through non-commercial futures positions, for example, or even through ETFs, whether physical or not, has shown clear signs of disinterest from the gold market. This may be due to a few things. The first one was the lack of direction of the gold price in March and April, which may have discouraged some investors. The second factor that is probably worth mentioning has been the decrease in the expectation of further monetary accommodation. Of course, the prospects of further monetary accommodation has been a very strong positive driver for the gold price over recent years, and conversely has been hampering the rally since March of this year. To conclude we believe that gold is still perceived as a safe haven by a variety of actors in the gold market.
Gold is a close negative correlation with the US dollar. Dollar strength is currently weighing heavily on prices. Do you predict this will continue, and for how long?
At the moment, the positive correlation between the dollar and the euro dollar and gold, or the Aussie dollar and gold, is around 50%. So again, it is not a strong enough positive correlation to warrant to explain the decline in gold prices through the appreciation of the dollar against a range of currencies. However, when we're talking about safe haven and the fact that gold has not been performing as you would expect a safe haven asset to perform in times of risk aversion, as we are seeing now, the dollar has definitely been behaving like a safe haven in recent weeks, appreciating against a wide range of currencies, not only the dollar, not only the euro, but also currencies that are more sensitive to the economic cycle, like the Australian dollar. So our economists believe that the dollar will depreciate on average in 2012. So if anything, it should be a positive factor on the gold price. However, at times such as this, when risk aversion is very high, it seems that investors will tend to favour the dollar above gold.
Fresh buying was witnessed in India after bullion's price decreased. Do you think these price drops will increase interest?
I think to look at consumption, gold consumption in India, you have to look at the gold price in rupee terms. Now, when you look at this gold price in rupee terms, you can see that it is still very near record highs for most of the period since October of last year, which means that despite the strong decline we've seen from 1900 to about 1550 in dollar terms, actually the high of the in rupee terms was around 90,000 rupees, and it's now trading around 84,000 rupees. So the decline has been much less in rupee terms. The interest from India is, of course, cultural and linked to some festivals. We've got the Akshaya Tritiya festival recently that's spurred some demand for gold, but we believe that beyond these cultural factors and the monsoon season coming this summer, a real decline in rupee terms in the gold price will be the trigger for a resumption in Indian gold consumption.
Okay, thank you Anne-Laure for showing your outlooks with us today. Stay tuned to Dukascopy TV for more interviews like this. Goodbye for now.